The odds still favour a Remain vote in the UK's June 23rd referendum on membership of the European Union, but the gap's closing. The prospect of Brexit is shaking domestic and international markets. The implications run well beyond the English Channel and constitute one of the key risks confronting a fragile global economy. I'm joined to discuss some of the post-Brexit scenarios by Mike Jakeman from our global forecasting team. Mike, before we move to Brexit, let's cover off the outlook for the global economy. What's changed since last month and why?
We've seen a minor upgrade in our aggregate growth forecast for 2016, very minor from 2.2 to 2.3% this year. So, both of those, I think, are pretty much bang average for the global economy. We're not expecting any great shakes this year. Those changes are driven by slightly less deep recessions in Russia and Brazil compared to where we thought last year. But in terms of the overall picture, I think it's fairly similar. Russia is still going to contract by 1%. Brazil is going to contract by 3%. These are still fairly substantial recessions. We've also made a slight upward revision to our oil price. Again, for the year as a whole, we now expect it to average just under $43 a barrel. That's a bit higher than it was before. But all the kind of market mechanisms behind that forecast are still the same as they were. The reason for the upgrade is because we've seen some quite significant supply disruptions since last month. The wildfires in Canada and also militancy in Nigeria have taken close to 1 million barrels a day of oil off the market. That's meant that the imbalance we've seen with too much supply has shrunk a little bit. But essentially, the oil market's in a fairly similar place. The global economy is going to have an average year. There's not too much to get excited about, either from a developed world perspective or from an emerging market one.
Okay, back to Brexit now. Mm-hmm. We're forecasting Remain and have been, pretty much for the duration. Yep. And for the moment, at least, the bookies still agree with us, which is important. Give me a rundown of why we're sticking with that forecast, even as we see the gap closing.
So I think that the central plank of this is that we think that Britain is a small C conservative country. That was clear in the last general election, not only because the Conservative Party with a large C won, but because there is this general preference for the status quo, unless there is a really clear, concrete and obvious reason why British people should change their minds. And in our opinion, the Leave campaign has failed to articulate a set of reasons for Britain to leave that will persuade the population. They've definitely come closer than we were expecting perhaps 3 to 6 months ago. They've really hit on a nerve with this immigration argument. They've found that immigration is the most successful argument to pursue. And the Remain camp have tried to counter this with economics. And I don't think that economics has quite caught the public's interest in the same way. So that's why we've seen funnily enough, that's why the polls have narrowed. But we think that actually, a bit like we saw in the general election, when people are confronted with the choice in the ballot box, they may well, more people may well vote to maintain the status quo, just as they did by keeping the Conservatives in government, when faced with the actual decision, than perhaps they give themselves, than perhaps the impression they give when they talk to pollsters on the phone or answer queries on the internet.
Politically, this has been quite a staggering event. We've seen in the campaign, as it hots up and we get closer to the vote, some shattering of traditional party lines. So we've seen virtual sea battles out there on the River Thames. How do we expect this to play out in the? I know we're not expecting a Brexit vote, but we need to focus on scenarios should that happen. What do we expect the impact to be on British politics in the short term and in the long term?
Well, we're going to see some fairly major, again, we're not going to, if we assume that we are going to, we would see some pretty major implications at the very top of British politics. So David Cameron may stay on to implement a kind of transitional leadership, but we know that Cameron's goose will have been cooked. The man that will be the Prime Minister in waiting will be Boris Johnson, which is potentially a slightly frightening prospect. And also then we would see a huge rise in influence for all of those Brexiteers, those Tory MPs who've sort of backed Brexit and who've lined up behind Boris Johnson. It would also be great news for UKIP. Nigel Farage may find himself in the cabinet at long last, as far as he's concerned, without ever winning a parliamentary seat. So we would definitely see a lurch to the right among British politics. The very interesting thing will be what Boris Johnson decides to do about this, because I'm not convinced, as I know lots of other people aren't, that he actually, in his heart of hearts, supports Brexit, or he thinks that Britain leaving the EU is in Britain's best interests. So when it lands on him to either deliver this in a coherent way or to step away from it, I wouldn't be surprised, and we've written about this, whether or not there is a second referendum to debate the actual terms with which Britain would leave, which will definitely be seen as a sort of climb down, and it absolutely would be. But that, I think, reflects the fact that there's a lot of anger behind this vote. And I think when the reality sinks in, should we get that far, there may be a bit of sort of voters' remorse about this, and we may end up with a second vote. That might be sort of Boris's best way of managing to be a prime minister and get something done without simply having the Europe vote casting a huge shadow over him.
Okay, and we should touch on, just very briefly, since we're still expecting a Remain vote, impact on the UK government in the case of Remain?
So we know David Cameron isn't going to see out the term. If we get a Remain vote, again, that strengthens the support behind his two preferred successors, which are Theresa May and George Osborne. However, I would also sound a note of caution on this, because it also depends on the size of the Remain vote, because previously, maybe 3 or 4 months ago, it seemed conceivable we would get a really chunky Remain vote and that the issue would be dead. Whereas if we get a really, really tight vote, then we're going to keep hearing these calls from Eurosceptic Tory backbenchers. And the succession either to Theresa May or to George Osborne will be a lot bumpier than perhaps we'd have seen before.
Okay, let's look at the economics now. There's been, a bizarre range of claims and counterclaims and denials and dismissals of expert opinion.
And outright nonsense as well.
Indeed, yeah, and how dare they dismiss expert opinion. Let's settle this debate once and for all to everybody's satisfaction by laying out the Economist Intelligence Unit's view of the economic scenarios in case of Brexit.
And our view is quite clear. We think that Britain leaving the EU would be a bad move for the economy, to the extent that we've done some modelling, and we think that the British economy would be 6% smaller in 2020 in a scenario where Britain voted to leave than if it chose to remain. Now, our forecast of the British economy over the next 5 years isn't particularly stellar anyway. We're looking at growth of between 1% and 2% a year. But nonetheless, we think that if you take it out for 5 years, we'd have an economy that's 6% smaller. That includes a full-blown recession in 2017. That's predicated on the fact that it will take a little while for the investment decisions that companies are making now and will choose not to make following Brexit to hit home. So that's going to be a higher unemployment rate, something in the range of around 380,000 fewer jobs created in the UK. And then we have to start thinking about the trade channel, because we have no idea yet what kind of agreements would be made with the EU and with other trading partners in the event of Brexit. Our assumption is that what we get will be less good, and that trade in services in particular will be hit. We know that lots of big financial services companies have talked about relocating relocating offices and jobs out of London towards the continent. That's factored into our unemployment forecast. So we have a period of uncertainty immediately after. Then we're going to have a recession in 2017, and then from 2018 to 20, a kind of period of very slow, sort of partial recovery. But let's not forget that by the end of the decade, Britain is going to be significantly less well off and further behind where we think it would be otherwise if it voted to leave. Okay,
I want to interject a very brief question again here for you. We're talking about recession in 2017,
Yes.
2017. Already the UK is struggling to emerge from the last recession, growing quite well, but very much on the basis of supportive policy. How much room is there for the authorities, the central bank and the government to respond to a new recession in 2017?
On the monetary policy side, absolutely nothing. There is very little the Bank of England can do. The base rate is essentially at zero. The benefit from cutting it by a tenth or two would be essentially zero. They're just going to have to sit on their hands and wait for this. The government, of course, has made quite significant austerity cuts, although we are still in the middle of those.
Yeah.
So again, its ability to start spending freely, I think, is quite limited. George Osborne's talked about a range of tax hikes. I'm very skeptical about this because the ones he talked about were specifically at the demographic groups who are most likely to vote to leave. So I think that's probably a piece of politics. But I think it's a very fair point to say that if Britain enters the recession in 2017, policymakers have a lot fewer levers to pull to assist the economy to get it out of it than they did in 2009. That said, any recession we get in 2017 will be a lot shallower. We're not going to get a global financial crisis. But nonetheless, a recession is suboptimal. This is not something that we should be encouraging.
Okay. To finish off, let's just broaden a step away again from this. I think what we're seeing in UK politics, it has echoes all over the world in terms of a popular reaction, a rejection, if you like, of establishment politics. We're seeing populism on the rise all over the world, not least, of course, in the United States, where in November we may get Donald Trump as president. Again, not our forecast. Can you tell us a little bit about where you think this trend is coming from and possibly more importantly, where's it headed?
Well, I think the roots of it are fairly easy to discern, which is the fact that almost 10 years ago we had a catastrophic global financial crisis, and the responses to that, for at least from voters' perspectives, haven't been very good. There was a huge bailout to a financial sector that most people think hasn't paid its dues, and there were plenty of bankers who got out of that fine while governments had to bail out an awful lot of money, and obviously we had big recessions and very high unemployment rates, etc., which we're only starting to now sort of move through to the end of that process. And I think there's a slight sense that nothing has changed. And that includes living standards, which haven't improved at all because real wages haven't gone up for a long time in many developed markets. And there's a sense that I think politics just doesn't work for lots of people. So they're looking for new alternatives, and they might be quite crude and quite unsophisticated. But the arguments of Donald Trump and Nigel Farage and some of the newer European parties in Spain and Portugal and Italy, and even as far away as the Philippines and their new government under Rodrigo Duterte. They're appealing to something that's quite simple, which is we will build up your sense of national pride again after a decade in which, as I said, real incomes haven't gone up, and there's a sense that politicians aren't listening anymore. So a really kind of simple, clear, populist message is having an effect. It's gaining some resonance. Where this plays out, of course, is a much trickier question. I think even if Donald Trump is beaten relatively convincingly by Hillary Clinton, which is certainly a possibility, he will have left his mark on America. And I think both parties will be significantly changed for the experience of living through the Trump era, which we hope is going to be a very brief one. But nonetheless, the politicians who succeed in the future will be those who learn from the lessons of people like Trump and the need to connect with voters across all ends of the spectrum. And that's, we've talked about inequality. That's been one of the big buzzwords in economics in the last few years, and certainly Bernie Sanders in America has tapped into that from the other end of the spectrum. So politicians in the future will have to learn from this, and it will be very interesting to see what candidates put up for the 2020 US poll. I would expect quite a different race.
Super. Thank you very much, Mike. So the next time we sit here, it will be after the UK referendum, and we will know which way the UK population has voted, and no doubt that will colour the discussion we have then. Please join us in a month's time when we look once again at the global outlook, and thank you for joining us this time.